again. This is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 31st, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Lots of information this week, lots of interesting events are happening. Stock indices are taking a hit as they peel away from record highs. Small caps are leading to the downside. We'll look at junk bonds that are still looking vulnerable, and a potential trend change is in the making. So we're witnessing a flight to safety where utilities and consumer staples are gaining while transports are getting sold. We'll also look at emerging markets, which are led to the downside by China. Oil and copper just collapsed into their respective bear markets, and we will also look at dollar as it runs into resistance, and it is indeed helping precious metals, and Bitcoin could be breaking higher. Okay, so S&P 500 overall, this drop you can see very small still, so you can see the record highs were just recently set a few days ago. But as I kept, pointing out, I mean, this run was just tremendous, and in a sense, you can kind of figure maybe this was a measured move. So you can see this depth was duplicated on the upside, maybe. Um, so we are started taking profits. I am taking profits on various positions. You know, let's just roll with the blows, basically. Uh, This pullback could just stop right there, or it could continue lower. Just the way the intermarket behavior is, I feel like there could be more downside. When we get to junk ones, I'll show you what I mean. So overall, S&P 500 moving lower. Uh, Small caps, are leading the markets lower right now. You can see that from 52-week highs, the IWM dropped towards the blue line, while S&P is only at the green line. Okay, by the way, what are this green, blue, red, and yellow lines? You can find out more about them at MasterChartsTrading.com. These are proprietary trading indicators that you can have on your chart at on TradingView.com. So as long as you sign up on my website, MasterCharts Trading, I'll open the door for you. So more volatile small caps, not really a surprise that it's moving lower faster than others. But we should keep in mind that this is also more economically sensitive in a sense. So small caps are more economically sensitive. So Dow Jones kind of moving together with in lockstep with others. QQQ, another potential uh, bearish engulfing right there. So you can see one bearish engulfing right there on 24th January, whereas the candle on 24th of January engulfed the previous one completely. And the same goes here on the 31st of January, whereas the 30th of January candle was engulfed by today's candle completely. So not a great sign, and coupled with the fact that other indices are moving lower, I think we can pretty much expect QQQ to follow suit. So stocks in general move in lockstep, so we want to take them as a whole, so to speak. Junk bond. So this is the most concerning chart to me right this instant. Notice that the green, blue, red, and yellow lines were very wide apart here just recently in December, and right now they're very close together. So we can actually measure how far apart or how close together they are. They were about 7 points apart, and right this instant they are actually 3 points apart. So we're literally half of what it used to be. So trading range has really narrowed. What this means is if the junk bonds drop towards the yellow line and close below it at 106.23, I will think that now junk bonds are in a bear market. And as I keep pointing out, junk bonds and stocks indices are moving together in lockstep. So if one goes, the other one should go as well. And this is to me the most concerning thing right now. So I will be on the lookout basically for a trend change, and if it gets there, then we'll just have to deal with it. Yeah, we can have bull market or bear market, and we're not married to just one side. If the bear market begins, we can start shorting stocks, and I can show it you how to do it later on, not right this instant. Treasuries, so you can see that they moved higher to break out levels very close to record highs again, approaching new record highs. So new these are actual alerts. Again, one alert was on 3rd of January, the other one on 21st of January. Very nice moves higher already, so we are playing this on the upside. What's nice about my indicators is that you can basically it helps you at the very least be on the correct side of the market. So this is why here in January I'm not shorting treasuries. I'm actually looking to buy them, and this is exactly what we're doing. If the security closes above the blue line, that means it's in the bull market. Pretty straightforward. Same goes for intermediate treasuries, IEF. This is not an actual alert, but I just wanted to show you the how easy it is to trade. If you have this indicators on your chart, then all you have to do is just look for a pattern like this, a pullback towards the blue line and then a close above it. So this is where we usually buy. And BSV, the short-term bonds as well, breaking two new 52-week highs. So this is really kind of a big deal, and let me show you why I think it's a big deal. Here it is, the dynamic yield curve again. I keep showing the same chart. So you can see that the short-term yields are now above the 2-year, the 5-year, and the 7-year. Um, we can backtrack a little bit, and just a few weeks ago, uh, this was not the case. You can see the small short-term yields were below the 2, 5, and 7-year yields. This has already happened a few weeks ago, a few months ago rather. So here's the position, here is the situation back in June of 2019. Very concerning look where the short-term yields are actually above the longer-term ones. And we got to very close to an inversion of the yield curve, but then finally yeah, right there, basically the 30-year yield was so close to uh, 3 months yield that it was basically inverted. But here you can still say it's normal. I don't think it's normal in my book, but eventually, the Federal Reserve finally got its act together and decided to lower short-term interest rates. This did help, but now again, as the interest rates, or rather, as the bonds push higher, the interest rates are actually pushing uh, lower here, especially the intermediate ones, 2, 5, and 7. So the Federal Reserve most likely will need to come in and again lower the 3 months yield. So eventually this is going to be like a race to the bottom. And in Europe, for example, they have a inverted yield curve. So does that mean, or rather, I'm sorry, not inverted yield curve, but negative interest rates. So if the yield curve inverts, as I keep showing, we had instances like this in the past. Here's one from 2007 bear market. You can see the short-term interest rates were actually above the 30-year interest rates, and that eventually led to the decline in the stock market. The same went for year 2000. So is this going to happen now? Obviously, nobody knows, but we should be on the lookout for this, and we should be prepared. So this is causing a flight to safety, XLU utilities. You can see at fresh records. Now you can look at it more than one way. You can say that while utilities are expecting another interest rate lowering event because utilities are heavily dependent upon the borrowing of money, and the lower the interest rate, the better the profit margin for the utilities. So that makes sense. Um, Sometimes the breakouts for utilities are actually uh, the first to go to new records, and then the rest of the markets follow. Will this be the same, this time? We'll see. But right this instant, this feels like a quote-unquote flight to safety, where utilities are considered more safe than other stocks, and so investors are rotating into utilities. Same goes for XLP, consumer staples. So you can see that consumer staples actually made a record just a few days ago and very close to new records. Whereas S&P, for example, already started pulling back a few days ago. So uh, this is showing, a flight to safety, and we will need to work with it basically. And if or when eventually the bear market will begin, you cannot hide in utilities. Utilities will also get sold during a true bear market. Transportation stocks, IYT, by contrast, are actually being sold. So you can see the consumer staples, utilities pushing to new records, while transports are actually being sold. This is again another classic example of what it looks like for a flight to safety. So the Dow theory also states something of the similar nature. But as I keep tirelessly pointing out, the drop for or rather, if the stock market is in a bear market, all of the sectors will get sold. So let's just wait and see what happens. Big drop on emerging markets, 52-week highs here just in middle of January. Then we had big drop here. So this is EM is a diversified kind of ETF, but the dominant component of EM is China. So let me show you China. So China FXI large cap index, again, a new high here on the 31st of January, several alerts and actual, these are successful alerts, and it just completely collapsed. I did not send any new alerts here, even though this was a signal here on 23rd of January, so I decided to wait and see. It was a good thing. Now we're in a caution phase, very close to outright bear market for China. Bear market for China could start if this particular ETF FXI closes below 39, which is very close. It's like just a few percentage points. So this outbreak, the virus outbreak, is very important indeed. Um, it is affecting all aspects of lives, uh, and of course it's affecting economy as well. This is the reason why why the security is reacting in the way it is right now. So I do listen to news. I'm not blindly just buying and selling based on the indicators. I do occasionally listen to news and make a decision. For example, this was a decision not to open a position here on 23rd of January. All right, so many people were asking me about Tesla. Here's Tesla. Um, didn't really trade this one. Ergo, you can see a purple arrow. I usually put like blue or green arrows if I'm actually buying or selling or sending alerts. For this one, I just put a kind of like for informational purposes. But you can trade any security you like with my indicators. So, for example, here's an opportunity that happened on 25th of October of last year, several opportunities afterwards, and it just took off and just hit new records. So this is a 110% move if you opened just in October. Again, this is a type of alerts and trades that we like to do here at MasterCharts Trading. So briefly, let's look at oil and also at copper. Oil and copper collapsed. I had a long position. I bought USO. I closed it at a profit a few weeks ago. and then on the 23rd of January, it broke into the bear market. There it is, and continued lower. So this is a, showing that most likely demand is going to diminish for oil. So whether this is due to lessening of the United States-Iran tensions, or is it due to viral outbreak, which could put a damper on the various transportations sectors, shipping industries, etc. So oil is less in demand, and therefore the price is dropping. Now, of course, the absolute winner here for a collapse like is copper. You can see it's just a huge drop, almost over 13% drop. Uh, we traded on the upside, and these were successful trades. Alert, I wanted to short it myself here on the 27th of January. The price was just not good enough. I wanted to short it right on the close below the red line. Did not occur, so didn't really do much to it. But the point of the matter is copper is also an indicator of economic activity, and oil dropped, so less demand for oil. Copper dropped, perhaps less demand for copper. Why is this happening? Possibly due to the virus, because the trade is going to be affected by the various closures, such as and lockdowns, such as already I'm hearing that um, airlines are not going to be flying to China. Okay, dollar index. Dollar index, you can see I'm not making it up. My indicators actually mean something, and you can see right there on the 29th of January, a touch of the indicator line, and this is resistance. Why is this resistance? Because I think that on the 12th of December, right there where I'm hovering, the bear market for the dollar began, and so far it has been reaffirmed. Another close below the red line at 97.20 would mean we're reaffirming the bear market, and we could easily continue lower. So by extension, the other currencies are moving against the dollar. So here's, for example, euro versus US dollar, big rally today and closed above the resistance line. Resistance was at 1.10925 on daily charts. So easily we could see a move higher towards bullish levels. Bullish levels are currently at 1.123, and a breakout there further could weaken the dollar. By extension, weakness in the dollar would mean strength for precious metals. So precious metals, last week I said I wanted to kind of stay on the sidelines. Right now I'm actually buying precious metals. This is a new closing high today. So again, good news. I went ahead and I opened the position myself. You can see the alert right there on the 30th of January for silver. And here's my position for silver. I opened it at $16.80 for SLV. So let's see where it goes. But it does look promising right now. So if the dollar weakens further, precious metals should be gaining. Okay, so finally Bitcoin, BTC USD cleared the resistance again at 92.19. You can see a red line resistance right there. And if it continues higher, then a close above 11,079 currently would mean that Bitcoin has re-entered the bull market, and then the sky is the limit. It could just take off like crazy. Right this instant, I'm still thinking that we could see a rollover to the downside and a push lower, because right this instant, I still think that Bitcoin is in a bear market, and I would be more interested in shorting it on close below the red line, currently at 92.19. Okay, that's it for this week's recap. Please head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. Click on sign up and sign up for one of the services. We currently have alerts, which is basically a newsletter where I send various alerts about the stocks that we trade here at MasterCharts Trading. At $24.95 per month, this is a great deal. Trading indicators, you can buy these indicators, for example, green, blue, red, and yellow lines. You can have them on your chart for tradingview.com. You can have nice trades like this, like Tesla, 110% gain. How about that? And of course, the best value is to get both alerts and the indicators. And the reason being is not only you get to trade on your own, but you also get tons of examples. This is a great deal right now at $49.95, and if you want to get a yearly price, it's even better. Alright, that's it for this week's recap. Please don't forget to like the video, share this video with others, hit the like button, and subscribe to this channel. Thanks for watching. Bye bye.